All right, guys, we're here with another episode of Woke Wednesdays. Today we're going to be talking about the macro level view of all of your real estate needs. And I've got Catherine Robinson here with First American Title, and we're going to be talking about vesting. And vesting is actually the way you legally hold title as an owner. Catherine, tell us a little bit about some of those vesting options and what they should be looking for.
So ultimately, as a title company and as your lender, we are not permitted, for compliance reasons, to actually recommend nor give you guidance on how to vest.
We'll just get that right out of the way, right?
You gotta get it right out of the way, yep.
So talk to your CPA, talk to your attorney, figure out what vesting method is best for you.
Correct.
And your situation.
Correct. So ultimately, there are more common ways to vest, and with that, I will go over probably the top four. Tenancy in common, joint tenancy, community property, and then community property with rights of survivorship. Those are usually the most common, but again, it's all done on a specific individual basis, and really that is where your accountant, your CPA, your estate planner, your lawyer comes in. So
a lot of very important people that help you make these decisions.
Correct.
We're just trying to explain what some of those options are,
yep,
so that you can continue to ask more questions. And I think we're going to have some of the information
Correct.
From the matrix up on the screen,
yes,
here while we go over some of it. But let's talk about tenancy in common. When is that typically used?
So ultimately, a tenancy in common is two or more persons. Ownership can be divided into any number of interests, equal or unequal. And in this case, each co-owner may transfer their mortgage or their interests separately. So that's just some quick breakdown of how the tenancy in common works.
So next up is joint tenancy. So what's going on with joint tenancy?
So joint tenancy, again, with the parties involved, it's two or more natural persons. Creation will be single conveyance, creating identical interest in this case, in which vesting must specify joint tenancy. And then with regard to transferability, each co-owner may transfer his or her interests separately, but tenancy in common results.
Great. And then California is also a community property state, so there's a couple of different ways of holding title in a community property. And I would say the biggest difference is whether you're going to do survivorship or not do a right of survivorship. But explain a little bit about the community property and some of the differences.
So in this case, community property, spouses or domestic partners, again, for both community property. Creation for community property, presumption from marriage or domestic partnership, or can be designated in deed. And then with transferability, both spouses or domestic partners must consent to the transfer of the mortgage.
Of course.
So when you're dealing with the right of survivorship, again, spouses or domestic partners, single conveyance and spouses or domestic partners must indicate consent, which can be on deed. And then for transferability, both spouses or domestic partners must consent to the transfer of mortgage. So again, it's very
So
similar.
guys, just to reiterate, here are some of the most common options for what you can select. But again, we want you to make sure you're talking to your estate planner, your CPA, your attorney, whoever helps you and your family make these high-level decisions.
Correct.
To make sure you're doing everything right. You know, you also, if you're buying a house, and we'll get into this on another Woke Wednesdays, but you know, we're going to be talking about wills and trusts, creating and protecting your real estate for the future and your kids and your family. But this is a really great overview, very, very basic again, and we'll have the matrix up so you guys can see it as well. Hey guys, thanks for joining us today on today's episode of Title and Vesting. I really appreciate, Catherine, you being here. Don't forget to like, comment, subscribe on the YouTube, Facebook page. We're here to deliver some more information for you. And as always, I'm Sean LaRue with Franklin Loan Center. Stay hungry and stay positive. I hope you make it a great day.